Okay, so you've come to us with a bunch of information all about the 2025 income tax rules. And you're particularly interested in figuring out which kinds of earnings are basically waving goodbye to the taxman.
Right.
So under these new regulations, our mission today is to really dive deep into these rules and pull out the key areas of income that could actually be tax exempt. You've shared some articles with us.
Yeah.
Maybe some of your own notes. Great starting point. I think as we dig in here, there's definitely going to be some aha moments like, oh, wow, I didn't know that.
Absolutely. I think understanding what's not taxed is just as powerful as knowing what is taxed.
Right.
You know, it gives you a different lens to look through when you're looking at your finances and how to plan.
Yeah, for sure. Okay, let's start with something that impacts a huge part of the economy.
Yeah.
Agricultural income. So your sources point to Section 10(1) of the Income Tax Act, and this states that income from agriculture is fully exempt. So when we say agricultural income, what are we actually talking about here? Like, what are some practical examples?
I think what's really fascinating about this particular section is how broadly it's defined. You know, it's not just about the crops that come out of the ground. The regulations specify that it's the entire process. So it's the growing, harvesting, and the processing of agricultural produce. So, you know, turning wheat into flour or fruit into jam or preserves.
Okay.
And even the distribution and sale of those items.
Got it.
So you know those key things that are staples for us? Wheat, rice, pulses, fruit. So it's really a comprehensive definition.
Yeah, it sounds like a much wider scope than just someone out in the field tilling the land.
Right.
And it sounds like it follows that product pretty far
Yes,
down the chain.
it does.
So what about the land itself? If someone owns agricultural land,
Yeah.
but maybe they lease it out to a farmer, how does that work?
Well, interestingly enough, the rent that you receive from that agricultural land is also tax exempt as long as it's being actively used for agricultural operations. Oh, okay.
So, you know, that's a significant thing because there might be people who aren't directly involved in farming,
Right,
but they own the land.
right.
And so it allows them to actually, you know, rent their land out for agricultural operations and not be, you know, taxed on that rental income.
Got it. So from growing to processing to even just renting the land out, seems like the emphasis is there.
Yeah.
What about like buying and selling agricultural land? Does that fall under this?
It does. What the sources say is that income from the sale and purchase of agricultural land is also not subject to tax.
Oh, wow.
So that could be huge for people in the agricultural industry because it could ease transactions
Yeah.
and investments in the land without having to worry about capital gains tax.
So that really highlights that this sector of the economy is being given a priority.
Absolutely.
Okay, let's move on to something that touches a lot of people. Receiving gifts. So the 2025 rules seem to have some specific things in mind.
About this, particularly when we're talking about gifts from family.
Yeah.
What's the idea behind these rules?
Well, I think the general idea is to encourage and support families,
Okay.
you know, without imposing a tax burden on what's just a natural flow of giving between people who are close.
Yeah.
So the rules state that gifts received from relatives are generally not taxable.
Okay.
And then it goes on to define who is considered a relative, and it's pretty extensive.
It is. It's husband, wife, siblings, siblings of the husband or wife, siblings of parents. So that's aunts and uncles on both sides, right?
Yeah.
Grandparents, maternal grandparents, and even the spouses of your siblings.
Exactly. So it's a comprehensive list.
Yeah, very specific. Why is it so specific?
Well, I think the specificity probably is there to provide clarity
Okay.
and prevent ambiguity to make sure that genuine family exchanges
Right.
are protected.
Yeah.
But at the same time, the authorities have, you know, ways to scrutinize transactions that might look like gifts, but are actually other kinds of income transfers.
Yeah, that makes sense.
Yeah.
Drawing those lines very clearly.
Right.
So one area where gifts are really common is weddings.
Of course.
Are there any special rules for gifts that are given specifically on the occasion of a marriage?
Yeah, that's a really great point. The rules do specifically say that gifts received on the occasion of marriage are completely tax-free, regardless of how much money we're talking about.
Oh, wow.
And that's a really interesting thing because it's acknowledging the cultural significance
Right.
of gift giving during weddings.
Yeah.
And it kind of avoids putting a tax burden on what's often a traditional and heartfelt gesture.
Yeah, I think that would be a bit strange.
Yeah.
Like if you had to pay tax on your wedding gifts. Okay, so what about gifts from people who aren't relatives, like friends or colleagues?
Yeah.
Is there a different rule there?
There is. According to the sources, gifts from someone who's not a relative under these rules are not taxable up to a certain limit. And that limit is 50,000 rupees.
Okay.
In a given financial year. However, if you exceed that 50,000 rupee threshold, the entire amount becomes taxable, not just the amount above the limit.
Oh, wow.
So you really have to keep track.
Yeah, that's an important distinction there. So it allows for those smaller, more casual gifts without any tax implications.
Yeah.
But when we're talking about larger sums of money from non-family members, they're drawing a line there.
Yeah.
Okay, let's move on to something that impacts many as they leave the workforce. Gratuity. It looks like the rules treat government and private sector employees a bit differently.
Yeah.
Why is that?
So it looks like the distinction comes from the different regulations and different employment conditions that govern these two sectors.
Got it.
For government employees, the rules are pretty straightforward. Any gratuity that they get upon death or retirement is totally tax-free. So this really helps, people who have served in the public sector and their families. Gives them some financial security.
So that's a big benefit there for government employees. For those in the private sector, the sources mentioned the Gratuity Payment Act of 1972.
Yeah.
So what's the key thing to remember there?
Okay, so private sector employees who are covered under that Gratuity Payment Act, their retirement gratuity is tax-free up to 20 lakh rupees.
Okay.
So unlike the government employees where there's no limit, here they've put a cap on it.
Got it.
So, a big benefit.
Yeah.
But there is that ceiling there.
Right. And that's probably because of the way the gratuity is funded in the private sector.
Exactly. Different mechanisms.
Okay, so a notable difference there. Let's move on to scholarships.
Yeah.
This looks like there's some good news here.
Yeah, absolutely.
Across the board.
Yeah, the sources are very clear on this. Any scholarships that students receive in a recognized educational institution for the purpose of completing their courses, totally tax-free.
So that's great for those who are investing in their future.
It is.
Now, one of the articles you sent me also talked about voluntary retirement amounts. How are these related in terms of how they're taxed?
So, although they address different parts of life, both scholarships and some voluntary retirement amounts actually have this tax exemption benefit. And maybe the reason for this is to try to ease financial transitions.
Got it.
So the article says that if you get money under a scheme for voluntary retirement, it's tax-free up to 5 lakh rupees.
Okay.
So while scholarships help with education, this helps those who maybe want to retire a bit early.
So it's interesting to see that both of these scenarios, although different, both get this benefit to help with transitions.
Exactly.
Okay. Our last category is certain pensions that are tax exempt. And this seems like a way to recognize people who have given extraordinary service and sacrifice.
You got it. This category specifically acknowledges and rewards incredible contributions. So the sources say that people who have been awarded those really prestigious Gallantry awards like Mahavir Chakra, Paramvir Chakra, and Veer Chakra, they don't have to pay any tax on their pensions.
Wow.
So it's a clear way to show respect and financially recognize their bravery and service to the nation.
Those are definitely well-deserved for such incredible acts. And it's not just the people who get those awards that benefit, right?
You're absolutely right. It actually extends this tax exemption to the pensions received by family members.
Oh, wow.
Of those in the Indian Armed Forces.
Okay.
So this shows that we understand the sacrifices they make.
Yeah.
And it gives their families financial security. Being in the military has unique challenges and risks.
For sure.
So it really does show that the nation is dedicated to supporting them and their loved ones.
Right. Okay, so let's bring it all together now. We've identified, based on what you brought us, 5 main categories of income that are tax exempt under the 2025 rules. That broadly defined agricultural income, gifts from close relatives, gratuity with its different rules for government and private sector employees, scholarships for students, and then pensions.
Exactly.
For those who receive Gallantry awards or families of armed forces personnel.
Yeah, this deep dive that we've done today really offers a concentrated look at these key exemptions. So hopefully it's given you and everyone listening a better understanding of these really important parts of these new income tax regulations.
And, it raises a bigger question when you think about all of these exemptions together. How could they impact your own financial planning, or even like our understanding of economic priorities in the country,
Right.
and support systems for different groups of people.
Absolutely.
It really gives us a lot to think about
It does.
beyond just what our own tax bill is going to look like.
Yeah.
Thanks for taking this deep dive with us.
My pleasure.
Awesome.
Thank you.
Thanks for listening.
If you found this video valuable, please hit the like button and subscribe to the channel, and set the bell icon to all for notifications. Feel free to leave a respectful comment. Vulgar or inappropriate comments will be blocked. See you in the next video.